All right. So we are live, which was easy. Thejo Kote, the founder of Airbase. I'm excited to dive in. We were talking a little bit pre-show about the changing worlds of credit cards and how massive an industry it is. I'd love for you if you could just paint the landscape of what we're talking about here. So you could certainly go beyond the bounds of credit cards, but I think credit cards are a fascinating point to start with. With like what how big is the industry and how is it sort of split up now and how it generally works? I'd love to start off there. And welcome.
Well, thank you, Mike. Thank you for having me. And yeah, so I tend to spend a lot more time thinking about the corporate card space, right? Obviously, consumer credit is pretty big. And what's up?
Oh, I'm sorry, I had a mic issue for a second. Carry on.
Okay, so uh, wait, do you want to restart or something?
No, let's just keep going. We're on a good flow.
Okay, so I think a lot more about corporate cards. Obviously, consumer credit cards, that's a huge industry on its own, but it's very competitive. But it's the B2B side of it. If you look at corporate cards and how that industry is evolving very rapidly, that's something that I've been in the middle of. Given what we do at Airbase for a while, of course, we go a lot broader than just corporate cards, but it's an important element. And I guess what we were talking about earlier was if you look at in the US how much money is spent on corporate cards, it's something in the say $560 billion, or let's say $600 billion a year, and it's a huge market. A lot of money is spent on corporate cards, but if you really think about what that product is, it is essentially a piece of plastic that you put in an envelope, you mail it to an employee who you want to give that card to, and that piece of plastic is essentially your access to the payment rails. It could be Visa, Mastercard, Amex, three big ones. And employers spend the money, and at the end of the month, as an issuer, you give them a PDF statement and say, "Here's a list of transactions and where you spent the money." That is what the product has been for a long time, and the reason it's been that way is because the folks who issue the cards have traditionally been banks, and they are essentially selling access to the payment rails, right? So the Visa, Mastercard, Amex rails. They're not really software companies, but if you look at how businesses ultimately spend money on cards, it is a very workflow driven problem, right? And part of the reason why as companies scale, they tend to stop spending money on cards and they try to push everything to a PO backed spend, invoice spend, things like that, is essentially the reputation corporate cards have is one of being a free for all, right? And you can't control spend on it, and you can't have employees ask before they spend and those kinds of things. But what is very rapidly changing now is that, that's my thesis, that's kind of a sub thesis of what we do at Airbase, is that the corporate card is really turning into a software workflow product, right? It is going from this physical piece of plastic that you use to swipe at a point of sale terminal, or just use the numbers to pay online. It's becoming this deeply embedded workflow product inside of the business, and partly because of the infrastructure improvements that have been happening that are allowing software companies to access the payment rails, right? If you think about companies, the card issuing infrastructure that is becoming more mature, like Marqeta is a public company now, Stripe has their own issuing platform, RDN, Galileo, a whole bunch of ones that didn't even exist in the state of maturity that we see today a few years ago. And they are making it easy for essentially anybody. They're democratizing access to card issuing, right? And when that happens, the software companies that traditionally worked on the workflows inside of the business, they can now actually issue the cards too, right? And so you can fundamentally remake what a corporate card is and put together what might seem like really basic things to outsiders, but hasn't been available. When you think about corporate cards as a spend instrument, which is, hey, why can't you have the basic request approval workflow before somebody is able to spend money on a corporate card? Because in its current form, the corporate card, the number is shared across the company, or as long as you have, the card number, a CVV, an expiry date, anybody can spend money up to the limit on the card, right? And it's kind of a nightmare scenario for controllers and CFOs, and so that's why they tend to very tightly control who gets access to cards and who can spend money on cards and that kind of stuff. But why can't you really put a workflow behind it? Why can't you have employees request spend with all the right details? Why can't you have kind of an approval workflow, and then you issue dynamically a card? And that's kind of where the virtual cards come in, and that's been around as a technology for a while, but hasn't really become popular until the last few years, especially in a kind of a business context. But then dynamically create that card, put all the right controls based on what was approved inside of the business, and as the transactions are flowing on the card, if you can make it vendor specific, you can even add specific rules around what has to happen downstream. Because when you spend money, whether it be on cards or any other payment rails, you have to account for it. You have to record that in your accounting software. You have to categorize it, and there's a whole bunch of work that the accounting team has to do internally. Can you automate that away? You can, right? And if you kind of build things the right way and the workflows the right way, and those are all software workflows, right? And so when you start bringing together the software workflows and embed payments and cards deeply into it, now that's completely remade as a card product, right? And at Airbase we see that all day long. you know uh, uh, Most of our customers, if you look at the data, more than 90% of the dollars that are spent and transactions that happen, when we help our customers manage card spend, that happens on virtual cards, and less than 10% happen on physical cards, right? And physical cards now become relegated to what they probably should always have been only used for, which is ad hoc spend. It's like, hey, I can't predict what I'm going to spend. I might be traveling, I'm at an airport, I need to buy coffee, and I need to go swipe the card, right? It's not really predictable. But over the last, say, 10, 15 years, so much of the card transactions in businesses happen for, like, recurring expenses, software purchases, services that you consume. Like, everybody has gotten better as vendors in accepting card based payments, but the control aspects that businesses want when on the spending side, this is just not evolved until very recently. So there's this massive shift happening where the $600 billion that are spent every year, that's going to be fundamentally be remade, right? And so if you look at who owns the kind of the spend, I think the top seven banks own like 95% of that $600 billion that are spent in terms of issuing of the cards. And traditionally they haven't been software companies, right? So they have been financial services firms that mostly think in terms of access to rails and interchange and lending, and the muscles and the strength that they have is slightly different. And what is very rapidly happening is, as the issuing infrastructure is getting commoditized and anybody can come and kind of get access to those payment rails, innovation is shifting to the next layer up, in that stack. And it's the corporate card is becoming a software product. And a lot of these banks and institutions that today own that uh, volume of spend that happens, they need to act very quickly and figure out, okay, as expectations of businesses are going to rapidly change, how do they kind of step up? And that's partly how we think of our strategy. And our strategy has never been to, yes, we issue our cards today, but that was mostly to showcase, what does this whole thesis of the corporate card being a software workflow product even mean, right? And now that we have done that, and we have lots of customers using that, and when we're seeing a lot of success in partnering with banks, and because they're not dumb, they realize that this shift is happening and this is going to be the future. And so we're doing lots of good work in terms of
Yeah.
partnerships and enabling them to kind of
Yeah.
deliver this. Right?
And yeah, thanks for that background. When you started this company, did you come at this from the payment side, from the banking credit card knowledge side, or more of the software side? I'm curious your background and the origin of
Software first.
Airbase.
No,
Yeah.
this is my second company. Airbase is the second company I founded. Before this, I built, and we exited another a company called Automatic, which was in a very
Hmm.
different domain. It was a connected car platform. And when I started working on that company, I didn't know anything about finance and accounting, and I didn't even know the difference between cash and accrual accounting, like basic stuff like that, right? But uh, now, unlike lots of software company CEOs, I was forced to learn, mainly
Yeah,
because
yeah.
we had the bright idea of making hardware, and you
I
know,
used it actually. I liked that product. I stuck it on my. I had a Mazda. I would stick it on, and I think I would use Turo. I was really into Turo, so I'd like have that, and I'd rent my car, give my car to friends. So I liked it. It was cool. You stuck. One thing I remember was that it was you didn't charge monthly. That was the selling point for
we
me.
did
I was like,
not.
oh man, I
Again,
like that.
that was a different lesson. Is that this is what I tell every founder who's working on a hardware company. You got to figure out a recurring revenue model,
Mm.
because just selling the hardware device, you know, especially as a venture funded company, every year you're trying to grow, and but on January 1 you are starting at zero every single year, and you have to do everything you did last year and then some more. And and that's why I guess recurring businesses get the multiples and valuations they do. But anyway, so we were making hardware, so I was kind of forced to learn all about building inventory and the risk of building too much inventory and the cash flow management aspects of it, and on and on, right? And that was a pretty important part of the business, and it was existential if we got it wrong, and it could kill us. And so I made the effort to learn about financial operations and some of these things. And as I was building out the finance team, it was always, I was curious, right? Like, what do these people do, and what is this monthly close that happens, and what is that process, and what do AP people do, what do AR people do, and what is FP&A? And just through that journey learned a lot about what happens in the finance and accounting teams. And it was a super frustrating experience, if you especially on the spend side of things. As a venture funded company and a unprofitable company at that, I always cared a lot about how much money we spent, because it was my job to ultimately go raise that money once we ran out. And the path to profitability was not that easy, as a hardware
Yeah,
company, which
no,
had like
it's not.
costs and things like that, right? And so I cared about it, but it was such a poor experience overall, right? And every dollar we spent was going out through a different system. We had a corporate card for some spend. We had something like a bill.com for the invoices that were coming in, and ACH and check. We had like something like an Expensify for expense reimbursements. And the whole request approval workflow as we were scaling as a business was some ad hoc mess. you know People asking and approving things on Slack, on email. And
Yeah, it's
uh,
just so
you know,
disorganized because it's not connected. The software is not connected to the card.
yeah, nothing is connected, right? They're all happening
Yeah.
in different systems. And it's impossible to hold budget owners accountable in the business. And as a founder, I wanted to have a good spend culture. Like, people should own
Right.
the things that they spend on, be accountable for things they spend on. That's so hard to do, because as a budget owner, for example, if you don't even know what you're spending on, and you can't provide them the right tools in to show them in real time, hey, this is what you've spent money on, you can't do that, because you're spending money in like four different systems.
Yeah.
And throughout the month, all these people who own budgets, like, say it's the 20th of the month, today we're recording this, and you want to, as a budget owner, make a decision on, hey, I want to spend $50,000 on this thing. How will it impact my budget, right? It is an impossible question to answer, because you don't have access to the information on what you've already spent, right? Because its spend is happening in these different systems. You don't have access to these systems. You have to wait until the end of the month, until the finance team goes and pulls the data from all these different systems,
Yeah.
puts it
Yeah.
all into
Yeah.
your system, financial statements come out of it. And so you're winging it, basically, right? So everybody is kind of making these decisions without a lot of good information. And that's how modern businesses operate. You're always about 6 weeks behind in terms of your visibility into, how am I doing against budget, how am I spending. And so
Oh yeah.
you can't even kind of hold people accountable and have a good spend culture in the company. And all of this was super frustrating to me. I'm like, this is just broken. Like, who would build a system?
Yeah, I remember we would have like a meeting every few months in my last startup where we would look at all the SaaS recurring software expenses that we had, and we have to have everyone involved because it'd be some, especially they're always so cryptic. It's like ACI Limited LLC, and it's like, oh no, that's the tool that I use. It's called you know Floppy Bird, who knows, whatever. It's some like software tool, but it's misnamed and no one knows who originally bought it. So you're paying for things. I swear, this is like the dark secret of SaaS companies in B2B. is like the amount of value they deliver is a fraction of what they end up charging because of these,
Yeah,
forgotten
and
charges.
it is, and I went through that so many times, like
Yeah.
almost like every budgeting cycle you would go through the, if you want to ask the question, hey, what goes into that next budget cycle, and you're going through the lines of what you're spending money on, like always you're pulling people in and saying, what is this, why are we spending money on this? Oh, this thing, we stopped using it 6 months ago, and on and on and on, right? There's huge amounts of leakage that happens in the business, and all of that, at the root of it comes down to bad visibility, bad control, and poor flow of information within the team, and lack of good collaboration tools around the decision making around how you spend money. And this was all kind of apparent to me. And but of course, I was building a different company, and I didn't have the time to kind of go do anything about it. And it went into my ideas notebook that I keep
Yep.
for startup ideas when you find something broken. And anybody
Yep.
who's kind of involved in the process of building a business just runs into all of these things that this is broken, this is broken. And some of them are, whole businesses you
Sizable.
can go and
Yeah.
build.
Exactly.
Yeah. And so, and anyway, so then, in 2017 we sold that company to Sirius XM, and I took a break. And then, as I was thinking about what I was going to do next, and there were a few ideas, but this was the one that I'm working on at Airbase now, that I kept coming back to. I had a thesis about what was broken, and we could probably spend a whole hour talking about why the hell did the ecosystem even evolve that way. When you think about how a business spends money, especially in the small and mid market segments, why is it that some money is spent on corporate cards, which is a whole system of its own, some in a bill payment system, some in an Expensify system? Why did these pretty large software categories, which is supporting multiple public companies in each of these categories, why did they evolve in silos like that? Why did that happen? And if you start digging into some of those things, right? Of course, one of the reasons is that many of them are just kind of layers on top of a payment rail, right? Credit
Hmm.
cards are a layer on top of the card rails, and
Yep.
a system like a bill.com is a layer on top of ACH, paper
Yep.
checks, and some are focused on specific workflows, Expensify for expense reimbursements, and they all kind of evolved separately. It definitely didn't happen because that was the right experience for businesses, for finance and accounting teams, for employees. It just happened because bringing together software workflows and payments, so many different types of them, was just hard, right? It was just hard to do, and companies just focused on smaller areas. But my thesis, starting say what early 2017, was that, hey, that's starting to change now, right? Like, that you can ask the kind of first principles question of, given the infrastructure and the way it has evolved today and the way it is evolving, if you had access to that today, like, how would you kind of recreate this whole experience of how a business spends money? And that's kind of the question I asked, and I was fairly confident that the infrastructure was mature enough. Banks were getting better at allowing fintechs to plug into them, and through APIs, and card issuing platforms were becoming more mature. So you start to bring all of these different elements together. You're like, hey, you can
Yeah.
actually work backwards from the experience you want to deliver, especially to the finance and accounting team, but the rest of the business,
Right.
which, if you think about it, they really care about three steps when you're spending money, right? Before you spend money, ask. And I
Right.
want the right people to sign off on it. That's step one. Step two is, okay, you have permission to spend the money. Okay, pay the vendor, right? Consume the service, pay the vendor. I don't really care how the money moves from my bank account to the vendor's bank account. It could be your cards, ACH check, wires, whatever, right? That's an
Hmm.
implementation detail, right? Banks may care a lot about the payment rails over which money flows and things like that. But as a business operations person, it's an implementation detail. You want
Yeah. Who
money to go
cares?
from
I
your
mean,
bank
do you
account to
care?
a.
Like, if I send you an email, I don't care what protocol it goes over. I don't care what wire it sends. It's like, I just want it to pop up and be useful.
Exactly. And that's on the margins, there are some needs
Yeah.
around timing of payment, or the do I get some cash back, those kinds of things. But by and large, as especially if you're a mature business, yeah, the consumer mindset is always optimized for cash back and those kinds of things. But you talk to a controller of a 200, 300, 400 employee company, a CFO, they have bigger fish to fry. Like, they're not trying to optimize on
Yeah.
these smaller things. They're thinking about larger scale, control, and how do I make sure I have a good control ecosystem. I'm going to go through an audit, and they're going to challenge me on some of those control kind of processes that we have in place. How do I avoid hiring an army of AP people to do that last step. So the first step is, hey, ask before you spend, good process, pay the vendor. And then after the money's left the door, you have to do the accounting workflows. You have to kind of categorize, record it correctly. How do I avoid hiring an army of AP people as I scale? If the whole process is happening in 8 different systems, then I have to kind of keep hiring people to deal
Right.
with the complexity of payments and
I mean,
all
it
of
makes
that.
sense to me. It's like it all just makes sense. It's just like, okay, previously there was these systems that kind of built upon existing card rails, and there was a lot of logic that was being done manually. Let's just build a software company that enables the finance people and companies to manage the workflows that they want. Given that the APIs and access to virtual cards are available, you put two and two together and be like, okay, let's solve this problem. So Airbase now exists. Do you feel like it's just like, who doesn't want Airbase to exist? What companies or incumbents are like, oh man, we have to do something now. We have to change the way we're operating. Is it banks? I mean, are they feeling
Banks for
pressure?
sure. I
Banks,
think
yeah,
banks
yeah,
for
because they're the
sure
one
have to
issuing
support.
cards,
Exactly. At least
right?
from a, again, the bigger problem we go after is the all non-payroll spend, because our thesis there on that front also is that the bigger prize and the bigger opportunity is, if you look at all of the money that any business spends, you can put it into two buckets at a very high level:
Mm,
payroll, non-payroll, right? And payroll is, there are lots of payroll systems out there. That's a whole beast of its own.
mm.
Those systems serve a pretty good need. There isn't like a 10x improvement in
Yeah,
experience that you can
this is
deliver.
like
But if you look,
Gusto kind of companies.
exactly, Gusto,
Yeah, yeah,
ADP,
yeah,
and
yeah.
there are a whole bunch of different segments of the market. You have different players. Small end of the market, mid market, enterprise. Workday, for example, does that on the enterprise side. So you have like, that's a well served, fairly well served market. And at least I didn't, as I was looking at the market as a whole, I was not convinced that there's like a 10x improvement that you can bring to the table on the payroll side. But the non-payroll side is a mess, especially on the small and mid market segments. So many different silos, so many different fragmented systems. And so our thesis has always been, at a high level, every non-payroll spend in one platform, right? And every workflow from end to end, from the moment an employee thinks, I want to spend money, how does the request workflow happen, approval workflow happen, how does all
Right,
the
right.
collaboration around the decision to spend money happen in that system, and then how do you pay the vendor, and abstract away payment rails, like essentially support every payment rail.
Yeah.
And then finally the accounting workflows and how it syncs through APIs into the general ledger, how all of that happens. Now, doing that, saying that is easy, but executing against that vision is quite hard, because you're literally building multiple systems. There's a whole card issuing and corporate card
Hmm.
system, that is a whole.
We're Yeah, I was
Go
going to
ahead.
say, in once you're right. I'm not discounting that at all. But it is, at least you've clearly defined the problem. You know what you want to do, and so now it's about executing and building all these APIs and connections. Do you feel like there's a, a like a level two to this? What's okay? So you have, you guys now are roughly 5 years old, raised a bunch of money. I assume, with good market traction, the mentality now is like Series B, Series C is like, keep doing what is working, but expand it to many more companies. Is there do you see like a horizon here where it's like, okay, so now companies are using the software to create credit cards, people are spending them. Very few credit cards are probably being issued in physical form anyways, because people don't need that unless you're in person, and most corporate spending is digital. uh, does the concept of a credit card change in the future? Do you think that like, I'm curious to ask you about this. Where does Visa, MasterCard sit in the long term? Are they still going to be the credit card issuers forever, or will they be like, who flips their table?
Yeah, no, I think they're in a good position. Yeah, yeah,
Yeah.
there's open banking stuff happening and all of that, which obviously they are aware of. But from where I'm sitting, I take a little bit of the uh, uh, opposite approach of thinking of us not as a payments company at all. Yes, we handle a lot of money, and we're approaching kind of a $2 billion of annualized spend flowing through our platform on behalf of our customers, and that's increasing rapidly. And so we deal with a lot of money, and a lot of money flows through our platform. But first and foremost, we think of ourselves as a software workflow product, right? and the payments piece of it is a side effect, that ultimately our customers care about only so much, insofar as they care about money moving from their bank to their vendor's bank
Right.
account.
That makes sense.
Details they don't really care as much about, because they're trying to solve the bigger business problem of getting good control, getting good visibility, reducing wastage of spend, and saving lots of money. If you can have good processes end to end and save 1 2 3% of non-payroll spend for a good sized business, that's a lot of money, right? And so those are the kinds of things that they care about a lot. And how do you, as a finance and accounting team, how do you deliver a much better experience to the rest of the employee base, instead of doing stupid stuff like saying, oh, you're a manager and you have to approve spend routinely. Oh, you're approving an expense report, log into Expensify and do that. Or you're approving an invoice that your team owns, log into bill.com, because that's where you have to approve it. Or you want to request spend, you want a PO, go log into NetSuite. Hey, it's just really
Yeah.
bad
Oh, I get it.
experiences.
I mean, I'm
And so
so
we are
Airbase makes sense. It's just like it's kind of a common sense problem to solve. Like once you run a company, you realize, okay, these are clearly problems that should be at least integrated into software experience. So I don't have to do
Yeah,
all this
and
manual work.
the interesting thing for us, of course, is that uh, it is a very basic workflow that every business needs to solve, and if you can just solve that really well, and of course, the thing that gets me up in the morning is that I can't see a world. Of course, you always have the adoption curve and all of that, but go forward a few years, right? Go forward 3 4 5 years. I cannot see a world where, as the market and kind of customers become more and more aware of the opportunity to kind of do everything in a single platform and solve it in a really good way end to end, who in their right minds is going to say no, but I prefer having 5 different systems to solve this problem? And that's just not going to happen, right? And so there's this kind of massive shift that is going to happen in market expectation, customer expectation, that why the hell would I just sign up for like so many different systems? And if you cannot deliver that experience in one kind of platform, I don't want it, right?
Yeah.
And so that's
Yeah.
that's where the market will go. I'm confident. And but that is where there is a shift in mindset, because if you think about how the market is always sold products and the categories that they're familiar with, banks have always been very concerned about corporate cards and getting people to spend money on corporate cards and the interchange revenue that comes with that, and they care about that, and your bill payments and reimbursements, those have all been separate categories of products. Partly what we are doing is saying that no, they all actually, it's one problem of how you spend money as a business. And so we're going to kind of bring it under this umbrella of spend management, which of course, as a category, we didn't create. Spend management companies have
Yeah.
existed at the enterprise level for a while. If you think of Ariba and Coupa and companies like that, they've existed for a while, but the mid market and lower end of the market have been especially underserved when it comes to having to pick all of these different tools. And part of what we are doing is that creating that category in those segments and saying, look, it's not about these silos or individual kind of systems. It's spend management. Like, you should think about it as all spend that happens inside of the business. And that's kind of the category we are creating in that segment and evangelizing
Mm-hmm. Mm-hmm.
that segment. And I think we have very interesting conversation with banks and a whole bunch of other um, entities in the ecosystem about some of these things, right? Because a lot of the interesting conversations we're having with banks right now is that, because even inside those banks, you have like teams of people and silos of people, but they're only thinking of corporate cards. Some people are only thinking about the AP
Right.
workflows and ACH and check, and they're all kind of bifurcated. And the conversations we have with them is that, look, your customer doesn't think of it that way, right? Your customer really doesn't care about individual payment rails and how you bifurcate it internally. They want an experience. They're just spending money, and they think of it in terms of the experience and workflows internally for all employees and finance and accounting people. So that's going to have to be a change in mindset. And look, the smartest banks get it, right? They're not
Yeah.
kind of
Why? I always wonder this. Why does some of the new web-based banks like Novo, Mercury, they don't work with credit cards. They don't issue credit cards. Like in our business, we have to have a Chase account just to get a credit card. Otherwise, we have to use debit card everywhere, which is comes with a few downsides. Is that just is that just on their roadmap? Do you see, or is there something fundamental behind the scenes that prevents these web based banks from easily issuing cards?
no. I think it's ultimately the muscle and the DNA to be a lender is very
Yeah.
different. And
Okay.
for the longest time, even though we issue cards, that's changed now with us. But we're about 4 years into this journey now, and it was only about 6 to 8 months ago that we started offering credit on our cards, right? And we used to be a pre-funded model because we were very explicitly focusing on the software workflow layer, and the size of customer that we typically went after. They didn't really care all that much about the line of credit that your corporate card gave them. They cared a lot more. Now think about a controller. If they're in the shower in the morning, are they thinking about
Yeah. No.
how do I get like 20 basis points of more cash back, or like an extra $20,000 of credit on my corporate card? No, they're thinking about, my entire team has a terrible experience. They're all unhappy about the expense reporting process. They're all unhappy about the pace at which they get information about what they're
Right.
spending. I'm not being a partner to them. I have to hire like three more AP people given the rate at which transactions are growing, and how my system is set up. Like, those are fundamental business problems that they are thinking about. And so we solve those, right? Like, that's what kind of
Right.
we solve. And we were growing very quickly, and because people are just moving
Yeah. Yeah.
away
Yeah.
from their giving up their line of credit just to get access to the software workflows. And the
So you
then
started
we
you started with debit as a for the first few years, and
yeah,
then
we were a
just
pre-funded model. We're like, hey, load the money
yeah.
into
Yeah.
Airbase, and we have to kind of have the
Yeah.
back account on the back end, and customers were more than happy to do
Is
that.
that
And
is that difficult to issue? Because you're not taking on the credit card risk. You're using an issuer to do that. Were the issuers reluctant to um, issue cards in this way? Like, why not just turn on that feature from the start? Is there something? Maybe I don't understand how that works
so
exactly.
when it's pre-funded, nobody is taking risk. The customer is literally
Right.
loading money into the Airbase system, and then when a transaction comes on a card that we have issued, if there is balance in the customer's account, we authorize it and let it go through. Otherwise, we don't.
Mm,
So, like,
mm,
we are not taking risk. The bank is not taking
hmm.
risk. Customer is essentially
Right.
pre-funding. But of course, as we have grown and scaled, there are always some companies that, either for philosophical reasons, there are always CFOs where, yes, I have a $50 million in the bank. I don't need the credit that my corporate card gives me, but I will never give up credit. That's kind of a philosophy, right? And that's fine. And we will underwrite them and we'll give them credit. Now we do that. And so that's kind of evolving. And some companies
Hmm.
really can't run their business without that line of credit, given cash flow management constraints and things like that,
I
which
feel
is also
like
fine. And so we do
yeah.
that now. But going back to your question of, hey, why don't a bunch of these companies do that? Because when you are in a debit model, if you don't have the cost of capital, because money is not free, right?
Hmm.
And if you are going to lend them money, or you're going to have a model where it's a 7-day float, 30-day float, like most of the companies that have come around over the last, say, few years, there's been a frenzy of corporate card companies, right? So it's all
Mm.
been Brex and Ramp, and
Yeah.
it's always been corporate card. And that's partly because, as I was talking about earlier, the issuing layer has gotten commoditized. And so becoming a card issuer has become very easy. So the angle of attack for a lot of companies has very simply been, I'm going to make onboarding easy. I'm going to take more risk with these very small companies that traditional banks didn't want to underwrite. I'm going to give them more cash back. And so the axis of innovation and axis of competition has been more cash back, more rewards, bigger line of credit by taking more risk. And in my opinion, that's always been a race to the bottom, right? And so
Hmm.
there'll always be somebody else willing to say, I'll take lower margin and give you more of my cash back, and
It's
that'll
a
never end.
commodity.
It's a commodity, right? And so that'll keep happening. And that's why we've always focused on, you got to understand the business problem deeply, the workflows deeply, solve that really well. And if you can do that, then customers will even pay you to solve it, right? They're used to paying for software that solves real business problems for them. And the payment space is a side effect. Yes, you can make some revenue and all of that, but you will have defensibility. You can always,
Yeah.
the customer will always look at you and go, I don't have to switch you off because the next guy came and offered me 25 basis points or 50 basis points more of cash
Yeah.
back. I see so much more value
Yeah.
in this
Yeah, I mean,
partnership.
you
And
can't you can't lose when you're offering value on top of a commodity. Like that's kind of how it ends, right? Is people compete with a commodity. There's people who are willing to take. There's a race to the bottom, so no one ends up making really any money in the end. But then someone offers value on top of that, and then they just win because people effectively commodities become free when you, or they become fixed price. They become the same price, and the values on top of that, which
Yeah,
makes a lot of sense to me.
and that's the evolution that's happening, right? So
Yeah,
I've been kind of beating this. It's not just about the corporate cart, it's really about spend management, it's about the software. I've been beating that drum since for 4 years now, and we've
yeah,
also been
yeah.
mostly on the mid-market customers, right? And so that's who we've been going after. There are a whole bunch of companies like Brex and Divi and Ramp and those folks who go after like the smaller customers, less than 50 employees. Like the majority of their customers are all say less than 50 employees, less than 100 employees. But they've also kind of changed tune recently. Like as of I don't know 6 months ago, nobody had the words spend management on their websites, but
Uh,
now everybody, right? Like everybody's
uh,
talking about, because I think
they get
everybody sees.
it.
Yeah, I think they see the point that just being a corporate card, okay, that's kind of a race to the bottom, and you got to go higher. You got to think all spend. You got to kind of, offer more value on the software workflows. I think that realization has started to happen in the market. But again, it's a huge market, and there are segments, right? So I
Hmm.
think the analogy I think of ultimately is look at what happened in the accounting software and ERP kind of market, right? So you have QuickBooks and Xero, they're kind of the leaders on the low end of the market, NetSuite Intact in the mid market, SAP Oracle for enterprises. Very clear demarcation, all very successful companies, and because they're huge markets on their own. That spend management that's happening. You've had spend management in
Mm-hmm.
Coupa and
Mm-hmm.
Ariba and all those
Yeah.
folks. In the enterprise segment, you haven't had spend management as a category in the low end
Right.
and the mid market. That's getting created now, and some players are focusing on the low end, and we are mostly focusing on mid market, early enterprise, and we have a
Right.
big lead on that front. I'd like to think so, and I think it's a big opportunity. It's a big market, and lots of companies are going after it, right?
Yeah. No. Again, makes total sense to me. It's almost. I don't know. I want to use the word obvious because it's only obvious in hindsight, but it seems like very clear. In building this company, what were some challenges? Like, what were some in the trenches things where I mean, maybe it was a scenario where you had this idea, you went pitch, raised some money, hired a great team, and just it's been roses all the way. But generally, that's not the case. Were there times where you were like, oh shit, I don't know if this is going to work, or this is a major change, or was it? I'm curious to hear what the
Look,
process has been.
all of my painful founder experience stories, near death experiences, 2 weeks of payroll in the bank stories are all from my
You,
previous company, Automatic, right?
yeah,
It's
you you paid all your karmic debt in that company.
Yes. So, there wasn't a single round of funding I raised in my previous company where I desperately did not need the money. I always needed it, and everything was just harder. And partly it was, I was a first time founder. I wasn't as smart about things or experienced about things. And we were building in a difficult ecosystem, automotive, and we had the bright idea of doing hardware, which is always extra hard. But hey, ultimately, things ended in the right place,
Yeah,
and we landed the plane, and that was good. But and I took a lot of those lessons coming into Airbase, and I did not even raise a seed round. I funded the business myself. I was
yeah,
laser sharp focused on finding early product market fit, and I had a thesis. I spent 6 months just doing discovery. I spoke to dozens of controllers and accountants and
yeah,
folks like that to deeply understand where the opportunity is and the differentiation can be built. And so I like to think we've been doing it the right way, and every round of funding has been
yeah, yeah,
preempted so far. And look, value number one in terms of company values, the value number one for us is control your own destiny at Airbase, and that's what I ultimately focus on, is to go build
yeah,
a good business, and I think the rest of it will take care of itself, right?
yeah, yeah,
And
yeah.
that's what's been happening, and we've been able to attract
And
some awesome people. And I definitely, this journey at Airbase has been so much more fun and less stressful and
yeah.
all of that than
Isn't it
the first
amazing
time.
how like you've started a number of companies, I've started a number of companies. They seem you would think that they almost kind of converge on a common experience, but even with in your own life, it's like they're quite a bit different. I mean, there's certainly the factor of you have the knowledge of having previously run a company and you know the mistakes, but it's also you're in a different industry or you're doing something different with slightly different people, and it's like, but still, given those changes, I find it just it's always so much different. It surprises me how you would
It
think
is.
it you could
And look,
just
I think you also grow as a founder. I don't know if you had that
Yeah,
experience, but for
that's
me,
true.
it's so much of my personality was attached to Automatic, my previous company.
Yeah,
Like it was almost as an extension of me, and a company's failure was my failure, and on and on and on, right? And I've just gotten better at
yeah.
separating my happiness and then what's happening in the
That's so
business.
important. There's so many people
Yeah,
who just tie that together. So many founders who tie their identity to their company, and I think of it as like shock absorbers. Like if you only work and only think of your identity as the founder, leader of this company, you feel every hit, every high, every low, and it just rattles you. I think the burnout effect is just from being rattled up with those up and downs almost every day. I'm
yeah, and like
curious.
that's what happened in my previous
Yeah.
company. I don't think we would have sold as early as we did. Ultimately, it was a good outcome, but we could have probably gone longer, built more value if I hadn't ultimately just burnt out, right? And
Yeah.
that's what happened. And of course, lots of lessons about pacing yourself, I'm sure we could just keep going on that
Well,
tangent for a long
I
time.
want to ask you about what's your early days like? I mean, where did you kind of start off your journey? I guess born, raised, in your first
Yeah,
entry
so
into the
I
workforce.
was born in India. I spent the
Yeah.
first 27 years of my life in India. I studied over there. I worked in India after my undergrad for about 4.5 5 years.
What
I
city?
came to the US in 2009. So I grew up in the southern part of India. I spent about
Hmm.
9 years in Bangalore, but I actually grew up in a city near Bangalore called Mysore, which I think people in India will recognize, but maybe not those outside. It's a tiny city of 1 million people in South India,
Mm.
right? So every a city of 1 million people is a small city in India. But it was wonderful, growing up there. And so yeah, I kind of moved to Bangalore at some point, spent 9 years over there, undergrad, and then working, and then came to the US in 2009, and partly because I had identified very clear gaps. I had an ambition to do something of my own at some point. I had identified gaps in terms of how I could do that. So I wanted to come to grad school to fill some
Mm.
of those gaps and become a better product person and things like that, which happened. At the same time, I wanted to be in Silicon Valley, right? And
Mm.
the startup ecosystem in India now is very dynamic, which is awesome. But
Mm.
back in like 2007, 6, 7, 8, not so much, right? And so I felt that I had to be out
Do you think
here.
you would have moved today? Had say you had been that age back then or today?
Probably not. The way I think
Yeah.
about it always is maybe if I was an artist during the Renaissance, I would have found my way to Florence or
Right.
something like that. There are always in these moments of time, there are ecosystems and places where, and my philosophy has always been, you have to surround yourself with the best people in your chosen domain,
Yeah.
and then try to be the dumbest guy in the room at any given time, and then iterate, and then try to not be the dumbest guy, and that's what self improvement happens, growth happens, and then rinse and repeat and keep doing that. And yeah, I think now it's very different. The risk appetite is different, the culture in India is different, and there's a lot
Yeah.
of kind of success stories that have happened. Maybe not, I wouldn't have felt the need to come out here if I was kind of starting my career now. And but yeah, back then, about 10, 12 years ago, I still felt that the ecosystem was a lot more mature here. And look, this, everything about building a company is so hard. If you can
Mm.
reduce that pain in a few ways, where you have maturity around the funding ecosystem, around risk appetite, and the ability to hire people, and the like-mindedness of people who want to be in startups and take that risk and understand the risk reward equation, all of that kind of makes life a little easier, right? I think
Mm.
that's
Totally.
evolving, that's changing in India. But
Do,
I chose to come here and do it. And but by the way,
yeah.
today, our entire product development team is in India. We're about
Oh,
approaching
really?
100. Yeah, we are approaching 150 people at Airbase now, and globally distributed team, 10 countries. The bulk of the product development team is in India. I remember when I used to work in a startup in like 2000, say 6 to 9, it was impossible to recruit people, right? Like nobody
Yeah.
wanted to take the risk of working at startups, but now not the case, right? Lots of wealth has been
How
generated.
did you
People
set? Yeah,
have
totally agree. I mean, I think you're right. You're spot on. People look at startups now as the place to work, as opposed to the last resort. How did you go about setting up the office in India? Was it personal connections, or I'm curious why too?
no, we don't have an office in India, right? So it's
Oh,
a fully distributed
people
team.
are
Uh,
got it, but
Yeah.
people live in
So
it.
we have
Yeah.
people in, I don't know, I think a dozen cities, 15 cities in India. Everybody works from home, or,
Mm.
they can pick a co working space if they want to go do that. And that was a decision I made when I started Airbase from the get go. This is not a pandemic thing for us. This is from the day we started the company in 2017. We've always been fully remote, and I made that decision again. Yet another lesson from building Automatic. With Automatic, like, the entire team was in San Francisco, right?
Mm.
And I ultimately decided, okay, I'm never doing that again, because the sheer difficulty of building a team, scaling a team, it's insane competition, right? And because if you have an office in a place like San Francisco, you're essentially drawing a radius of 20 miles around the office and saying, I can just hire the people who live there and who might want to come and work with us. And that makes it very hard for not for everybody in the team, the hiring managers, and the amount of time it takes to fill important roles, the cost of doing that in a very expensive place like the Bay Area.
Yeah, it's crazy.
Every system.
It's also like the Bay Area is not growing. I mean, the lack of building that's happening on the peninsula is, and so there's
Exactly.
all the, and you're like everyone else. You're along with Facebook and Google and all the other startups that are like, we want to grow and hire as much people as possible. Everyone's like breathing inside of a room with no windows, and you kind of eventually people start suffocating with the lack of availability of talent, and then it just is like boom, everyone, and a lot of companies, as I say, go remote. And it's like, okay, there's a
Yeah.
huge wealth of people in South America or in the East Coast or other places. And you're just like,
You have to
that's,
make it work culturally, right?
yeah,
So the remote nature of it, and the thing that gave me confidence was that it's not like I was taking a huge risk, and other pioneers before us had done that very successfully,
yeah,
right? So you have GitLab that's been doing it, and
yeah,
the WordPress parent company Automatic with the two T's, they've been doing it. I think Envision has been a
yeah.
remote company all along, and lots of companies have done it. I'm like, hey, if they can do it, we'll figure it out, right? Yes, it's going to be a learning curve, right? And if other companies have been able to do it, we should be able to. And look, I also had a very selfish reason to do that. Yes, the business reasons were there in terms of access to talent and quickly growing teams, and doing it in a cost efficient way, and controlling your own destiny, and that kind of mindset. But for me, it was also very selfish in that my wife and I, we knew we were going to start a family, right? And
Mm,
I have a 3-year-old daughter now, and it was very obvious to me that if I sign up for a lifestyle like what I had when I was building Automatic, where during the difficult times I was in the office at 7 in the morning and back home at 9 or 10 at night, and I just wouldn't have kind of a relationship with my daughter, and I just didn't want that. And so I decided, nope, I'm going to kind of just
yeah,
have my office in my backyard, and I am so thankful I did that,
yeah,
because even today now I get to spend like so much more time with my daughter. I see her all through the day, and of course she's growing up now. She's going to daycare and that kind of
yeah,
stuff. But the relationship is so
yeah.
much more different. And for me, that was just important. And for all of those things came together, and I just decided that's
That's
the right path for us, right?
That's beautiful, man. And I think everyone else that is going to work for your company in the future, and many of them that work for you guys now, that's a major benefit. There's other people that are in a very similar situation. I'm in a very similar situation. Have a 1-year-old son, and it's like the remote culture first is quite amazing. And I think that if you like, look, sometimes you just need to put in those kind of hours. The startup's just going to die if you don't. And people do. A lot of people have done that with families, and it comes at a cost. You're kind of delaying your relationship, and you can do that for a little while, but if you do it too long, like, how many stories have you heard of people overworking, they end in divorce? And it's like, look, like, if you it's almost optimizing for productivity to have a sustainable relationship and life outside of work. uh, Otherwise it's just we implode as people. So kudos to you for seeing that so early.
No, and again, this is the perspective, right? The first time around, identity was tied up with the company. Like, so much of making that company successful was so important. But with Airbase, I'd like to think I have better perspective. Not that I don't work hard, I still work very hard, and we have big ambitions and big goals that we work towards. But there is no question, there is no doubt about what is ultimately the most important, and there is no amount of money anybody can give me to sacrifice some of the things that are more important to
Mm,
me than the work I do every day, which, while it is super fulfilling, and I wake up in the morning and love what I do, and so I'm very fortunate to be able to do this, but it always comes second. Easy
hmm
easy choice.
Well, it's I think it's a good example, a good leader to say that clearly. It allows other. I think it is a more attractive company. More people are going to be excited to work there because of uh, that moral reinforcement. So, and hey, Thejo, congrats on all the progress, man. I love what you guys are doing. I hope to use Airbase when my company gets to that point. And yeah, wish you the best. Hope we have you back someday.
No, thank you, Mike. Thanks for having me again, and all the best, and look forward to doing this again sometime soon.
All right.